Good morning, Monday, November 24th. And we're just 3 days away from Thanksgiving and 31 days from Christmas. So we're heading into the final stretch of the year. What's up, everybody? This is Mark here with your Clubhouse Insider for the week. So a quick update on the mortgage market. Rates got much better on Friday. The big reason is because the bond market rallied after comments from the New York Fed president suggesting that there's still room for adjustments to the rates here soon. So that pushed Treasury yields down, mortgage-backed securities followed, which is why rates dropped fast. This wasn't just a headline move, and investors actually shifted positions. And that helped pull mortgage rates down into the low sixes a little bit further than where we were already sitting. Anytime we see that kind of reaction, it's a reminder that the market moves on expectations, not just what the Fed actually does. So if we take a look at the rates, the 10-year Treasury here is just over 4. It was 4.05. Looks like a little slow today on the computer, but what we want here is, again, to have 3 and as further down to 3 as possible for you to see really good savings on interest rates. To show you a little bit more, rates haven't updated yet this morning. It looks like we are in a holiday week, so you might see things not move as quickly as you are used to, but we should start seeing this come down into the 6.1, 6.2 range once everything updates. Here to show you a little bit from the rate cut, once Powell said that rates were not going to get cut, or long term there weren't going to be as many cuts as expected, rates went up. And then here we go, you can start to see it start to fall towards the end of last week. It's going to come down a little bit further based on what actually happened. Once everything updates to today, you can see that it's still great out here for today, the 24th. So overall, next eyes are still on jobs and inflation data, which do have new release dates now that the government has reopened. Hopefully not too many fireworks here during a holiday week, but there are a lot of reports coming out because of those government shutdown delays also on Wednesday. So that absolutely could have an impact on rates. These are reports like the PPI and initial jobless claims, which are really important to these Fed governors. Next cut potential is December 10th. And then right now, the count for who is on board for a cut is about 50-50, cut versus pause for now. So bottom line for buyers and homeowners, this little dip gives you more buying power for now. And it's worth reviewing your numbers before the year end. So reach out if you want me to run any scenarios or to see if any recent drops help your situation. So that's your Clubhouse Insider for this week. I'll keep you posted on next week's Insider. But in the meantime, please follow the channel and reach out beforehand if you have any questions or scenarios you'd like me to help with. And I hope you have a happy Thanksgiving.